The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi there. Hi, folks. Basil Chapman here. My pleasure to be here Monday through Friday. At noon, 11 o'clock till noon. And just trying to get organized. I thought I was totally organized. And had a sudden shutdown on my computer. I'm not sure why it was, but we're back. We're back up. And let me just swing around here just to check something out, if you don't mind. And as we do that, I'm going to tell my engineer something, because we like everything as smoothly as possible. Not sure why there's a distortion, but here we are. All right, I've connected to brick. I can make an absolute transition now. As soon as my engineer tells me to switch over, I will do it. Al, are you ready? Testing 1, 2, 3. Okay, here we go. Switching over. Hope you got that. Are we there? Are we there? Waiting for it. 2 seconds. We got you. Okay, let's go, folks. Thank you, Steve Rhodes, for 2 great hours. Just always wonderful to listen to Steve. He's got all these different techniques and different tools that he's worked on and refined, and that's wonderful for us here at TFNN and wonderful for you listeners. And, of course, straight after this show, we've got the Options Hour. Let's do something that I think would be quite intriguing. I'm going to do this. I'm going to show you the E-mini and this down channel. It's actually what I call the pattern that I call the falling axe. It looks like an axe because that blade is expanding. You've got the long handle going up the left side. Let me just draw it in so you know what I'm talking about. There it is. If you're looking at Tiger TV, you'll see that the chart on the left is the daily chart. The one on the right here is the 120. Now, let me explain what this is. There's a trend line from resistance points in the declining mode from peak D at 1880.50. Oh, well, let me just do that. What is peak D? Well, from a buy signal to a buy mode, in any chart formation, you expect to get higher peaks, and you should get at least 3 to 4 peaks. The fourth peak is the one I labeled D. A, B, C. D is the fourth peak. At the fourth peak, that is where you have to be careful. It doesn't mean to say that you're going to have a problem there, but it says that's where you could and very often do, either D or E, especially E. Especially D. When you get to the D, if you're looking at higher peaks and you join a trend line, and in the webinar I'm going to do Thursday night, I'll include some of these techniques just very briefly. I won't spend as much time on them because the most important thing is to be able to look at the MACD and the slow stochastic. That's what it's all about. This is the webinar that I've got coming up right. Where did I put it? Will I find it? Yep, I'll find it because it's right there. TFNN front page. You go to the front page and you'll see subscriber webinar by Basil Chapman. Get the opening call and get a free webinar. Actually, it's a free webinar, and for a month you'll get the opening call, my daily service, for free. But in this webinar on Thursday, this March the 20th, between 6:30 and 7:30 Eastern Time, I'm going to be talking about and showing you how the MACD, the moving average, convergence, divergence, and the slow stochastic work. Now, I'm spending a lot of time, I'm refining some of the studies that I've done and the work that I've done in terms of being able to define them a little bit more mathematically. I don't like to spend too much time on that because it's the result that's the most important thing that for me. I don't really care how they get it as long as I can use it. But if you understand the machinations, if you understand what you're looking at, then it treats you to something that it envelops you with a kind of an informational resource to say, hey, if I'm looking at the 9 period, 26 period, that's 26 days back. It means that if I had to go further back on the 26 days and look at the chart, if there would very big distortions in the chart, that'll be reflected at some point very soon because the 26 day will be up and then it's gone. we're looking at something fresh. Anyway, there are different ways of looking at it. This, I think, is going to be one of my important webinars, in the sense that the timing of this couldn't be more perfect, and I'm going to explain a couple of things as we go along today. So don't forget, you can go to the front page of TFNN. All you have to do is sign up. You'll get a month of my newsletter free. Usually it's just 2 weeks. I'm slapping it on. I'm saying a month because it's such an important period. And I'm also saying you will get the free webinar, which will be archived on your page for, I believe, 30 days. Let's get rid of that. Now, one of the things I'm looking at is that pattern that I call the falling axe, long handle, and it's sloping, rising diagonally, and then the axe has this blade that takes the highest peaks, and this includes the wicks. I don't go for the bodies in this particular instance. Oh, if a body happens to be there and there's a tiny little wick, I'll include the body. But at this particular point, higher highs and much lower lows. That's the pattern, and it expands. Right there, you see it expanding. And most importantly, all of a sudden there's a turnaround, and the turnaround challenges the left side peak. It pierces the trend line and challenges the left side peak. So in the futures, it's 1867.75. A break above that, immediately I'll be looking, this is what I was talking about yesterday, at 1875 as the next level of resistance. But if it breaks this closes above 1867.75, then there's a real good chance you're going to test that the next left side peak. If you test that, there's just a really good chance you could go all the way to the top. I'm thinking we are very close to the big test of whether we've run out of room on the upside and that we're going to start that H pattern that takes you to the downside. Let me just draw it in so that you know what I'm talking about. Here's the daily chart. I'm going to draw it in so it looks something like that. And then all of a sudden by Thursday, at this time on Thursday, we should be down below 1852 or more under the 9-period moving average, maybe 1849. Because if we are above 1872, that's really positive action. Now, the 120-minute chart, let me open this up so you can see the beauty of this whole thing. Look at that. There's resistance at 1867.75, as I mentioned just a moment ago. That was the high at peak C minus, where it failed on the 13th at 10 o'clock in the morning. And we got to a high today of 1865.25, only 2.25 points away. But that's really important. Why? Because the MACD's at 84%, the MACD's expanding. Histogram is good. That's the 0% line. There you see the red lines at the bottom. Green line's going to the top on the 0% line. And what's most important about this is that the stochastic's at 83%. So it's leg C. If it's a failure pattern, the E-minis, this is the June E-minis, within this time tomorrow will be under 1854. But there's still a chance that you're going to make D, and D will have resistance in that 866 to 868 area, just touching, maybe piercing the left side high of 1867.75, made on, what did I say, the 13th, yes. So that's that. Now what I'd like to do is I'm going to go through a bunch of things here. The Dow's up 77. Dow's up 80 at 16,328. The S&P is up 938 at 1868. The composite index is up 35 at 43.15. The gold contract now. You remember yesterday I spent some time talking about the gold contract, and what I'd said was, where did it go? Gold contract? Where did I just put my 120-minute chart? Oh, right there. My 120-minute chart. Very important chart. I'd said that my suspicion was that we were making some kind of a top. Had a lovely email from one of my subscribers. Said using the technique, what he did was he went short twice. Thursday, I think it was, and then again either Friday or yesterday morning. I think it was Friday. The gold contract. He had bought the dust. D-U-S-T, I believe so. I should find that now if I can find it. And he asked me, what do I think? I said, I think it's brilliant. I think it's a great move. All I can say is that the, how can I put it? That the timing was exquisite. And I think that, Mr. Hi, Basil, I'm a subscriber to your newsletter. I have a question on a trade I put on by buying dust on Friday the 14th, and today, Monday the 17th. I like your opinion on holding this position more than one day if you feel gold will pull back more than one day. I have a 1-point profit as of 1 p.m. today, thanks to you, Carlos. So I told him that, what did I write back? Because I thought that was kind of cute what I wrote back. I read if I can find it. What I wrote back was basically that I should have got here. Hi, Carlos. I think you timed it perfectly. I think that there should be another week session Tuesday. Then going to Tuesday afternoon, Wednesday morning, we see how the market and gold are looking, what they're looking like. I would hold overnight. And thanks for being a subscriber. And good luck. I did add good luck because you never know. So this is a very interesting period. Why? Because Dust, he should have given me the buy signal. This is a perfect entry on Dust, which is the direction daily gold minus 3 times BR. I can't remember what the BR stands for, but that is beautifully bought it almost at the low. 16.16 was the low on the 14th, and here it is at 19.16. Bravo, Carlos. I should have called you to get that recommendation. I was talking about it. I was thinking of getting the DZZ, which is 200% long. Would have been a nice trade going from the 5 point at the time I wanted it, which was Thursday, if I was going to put it on. Let's call it Friday at the open. Friday would have been at open at 575, and right now it's at 594. Also a nice trade. But most importantly, what I'm looking at here is that gold, and I wanted to mention this because when I did Larry's show yesterday, I spent a little time on that. Gold is looking to me like the stochastic and the MACD are just getting a little tired in the daily chart. But the weekly chart, the only reason why I hesitated was because the weekly chart is still very strong. That's not to say that gold couldn't pull back to the 1355 high of the oval formation, and that was the high of the 3rd of March. And in fact, what did it do today? It went to 1351. Trading right now at 1357, down 15. So gold right now is down 15 at 1357. Silver's down 47 cents at 2080. Platinum is down 8. It's really been moving with the metals is at 1460. High grade copper is down again. It's a 3. Boy, oh man, copper is not a good sign here. Crude oil is up $1.12 at 99.21. Bonds are up 430 seconds at 132.30, and you've got the dollar down a tad. Dollar's up 9 cents at 79.61, and you've got the euro. I'm sorry, that's what it was, down just a tad. Now this is going to be very interesting. Why? Because the volatility index, the VIX index, that we took our gains in the volatility index. They were huge, but we took a nice profit. There were 2 profits that we took in the VIX index, the way we traded it. I was silly. I should have just grabbed those huge VIX. You don't mess around with. The VIX is the one thing you got to keep taking off the table every time it spikes. You can't look at it and say, "Oh man, this is going to go," and then name a number. So I'll be right back. Basil Chapman, Tiger Technicians. I'll love to take your calls at 867-927-6641.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back, and just had a couple of questions in the den. We've got a question about dry ships. Dry ships is a bulk shipper. It's trading at $3.54 right now, 53 cents. And what I says, if you're long, you have to make a stop under the 339 low of the 14th and repeat it again on the 17th. It needs to get to the 370s. It's very important that it gets to 370s. And in fact, 339, this maintains that low, and it means that, in fact, it can go above 437, because 438 starts leg deep and just goes straight up from there. You never know with this stock. It's really a wild one. But most importantly, it failed and dipped a lot more than I wanted it to. I've been keeping my eye on this. I wanted it to hold the 370s, maybe 362 max. This is a little too much. So I'd say I would not have a big position. I'd have a small position. I'd put a stop in. I would increase my allotment size if it can shoot over the 9-period moving average of 359. Then the moving average, I think that's the 362. And that to me would say great, because I want to see it get to the 370s and hold. So I'm not sure if I would get into it right now. I have to do more of a study. It would be very interesting if this started to rally now, because the Dow is up 102, the S&P is up 1163. This extra boost today, it's got nothing, well, maybe it has something to do with Russia, but it really has to do with pent-up demand. Even the IBB is spiking up nicely here at 261.34. So I'm looking at this and I'm saying, okay, here's another question that I had. It was on a stock that was actually some time ago. Dave White, our tech guru here at TFNN, introduced us all to this. It's called Maxwell Technologies, and it's in leg B up, huge leg B in the monthly, very nice leg D in the weekly, and leg E in the daily chart. And I'm suggesting that if you are long, right here, I'd start to think of taking a little bit off. I've got this as, let me do that quickly, 71. So this is A, B, no, that's 94, 9. So this is A, B, C, D. This is peak E in the daily, pulls back sharply, and we've got a question whether this is, and the 120-minute chart, I'm sorry, and we've got a question now whether this is F, continuing the old leg E, peak E, or brand new leg B in the daily. And this is where it's the toughest thing to do, is to make that decision, because everything about it says, hey, this is like a fresh buy signal to buy mode. So what I do is I go gray A because it's underneath the previous high, and this gets a B because I'm favoring B right just for now, slash F, saying, okay, if you can, at 590, if you can hold 560 to 520 and start pushing higher, that'll be good. So my recommendation is use, if you're watching your charts closely, you could have a stop that is at 1586, a stop on a little bit of your position just to take profits, money management, but also to be able to put back again, using maybe a trading stop of 30 cents or 20 cents. And if it goes higher, you're still in the trade. If it pulls back, you take that money out. And even if it goes higher, you've got your core position. But that allotment, you want to put back in if it pulls back at any point over the next week to 1386, somewhere between 1420 and 1386. You can start to think of putting that back. So that's my look at Maxwell. Thank you, Dave White, for introducing us to that. It's been quite a spectacular stock, and I know that you did very well on that. So a couple of things I wanted to do now, and let me just swing around here for 1 second, because I just got another email. Yeah, the question was, am I going to archive the webinar? Yes, the webinar will be archived. It'll be on your page. Also, on the continuous contract of the E-mini 120, I have leg D as we established a peak A at 3 a.m. this morning in the bar. Could you please check? I will certainly check. Is that on the what? 120-minute chart? So that's where we'll go. 120-minute chart, E-mini, ESM 14. I love these questions. Yes, I think you are right. Let me check it out. 1834.25, 1833. No, I did not get it. Now, some tools, some software, data vendors have a slightly different. I'm going to rephrase it. Sometimes they have the same data, but you are set. In other words, I have the low bar at 20 at exactly 10 o'clock on the 16th. If you don't have that, you might have moved your bar to a different time, so you will get a peak. So that's number one. Number two is, yes, sometimes they have slightly different data. I don't know how to account for it. All I can say is I would not be surprised, because it invariably happens that eventually I get a D and you get an E, and then it pulls back. For some reason, it invariably resolves itself. I'll be right back after these messages.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks, Basil Chapman. So we're going to go look at the VIX. I had a number of questions, both in the den and subscribers and others, about the volatility index. The last rally from 11.82 back on the 20th, was it? Back on the 17th of January. No, it's lower than that. It was the 15th of January, 1181. That's what it was, not 1182. 1181. On the 15th of January, started a move that went to peak A at 13.42, pulls back a day, then goes soaring up to 18.99 on the 27th of January, pulls back, and then it goes to 21.48 on the 3rd of February. And then it becomes a peak C minus because it failed in time and price. So what happens is, and VIX, you remember the VIX is not the root. The VIX is the result. In fact, it could be, no, it went to a lower low. Yeah, so it's peak C minus. And the volatility index is based on the synthetic futures contract in the New York Stock Exchange, although they now produce VIXs on everything just about. But the volatility index, as we look at it, failed, and then it went to peak A. It pulled back to 1344. The 1344 was the low on the 14th of February, and then went peak A on the 20th at 1580, pulls back above the 1344 level. It goes to 1349 on the 28th. Then it skyrockets. Remember that very ugly, was that a Monday, that ugly Monday? And the VIX goes to 30 on the 3rd of March. It goes to 1678, pulls back. And then 3 days ago, it skyrockets on Friday. Was it Friday, Monday, Tuesday? Yes, Friday. It skyrockets to 1822 on the 14th. And now it's giving that back. In fact, there's a good chance that I'm going to have to call this a peak C minus. You'll have to restart an entirely new VIX acceleration to the upside. So here's the question. It's a very good question. Hi, Basil. I'll be listening to your show today, but can't call in due to work. I went along the VIX at approximately 16 late last week, because now it's at 1424. That's not a good sign. Got to put stops in. Remember, that's why we took profits because of our stops. Late last week. When you review the VIX today, can you confirm where it is relative to the Chap wave count? I think peak E daily. No. The daily, you remember I just said it went to the peak C, then became peak C minus. Now it's once again in peak C. The 120-minute chart, I think that's what you mean, that made a peak E top at 1822 on Friday. And believe me, 1822 peak E, remember I spoke just a minute ago, I said those peaks, when you get there, you can pull back from a D or an E very sharply. Well, lo and behold, is the VIX on the Bloomberg screen? I don't know if the VIX is on the Bloomberg screen. It's a good question. And I just glancing at it, I do not see the VIX on the Bloomberg screen. No, that's Tom's screen. But this is leg B to the downside. Just 2 legs to the downside. It's already gone from 1822 to 1424. In fact, 1420. So that's 4 points. That's 20%. That is huge. No, it's more than 20%. So what we're looking at is the 200-period moving average at 1469 is the level to be watching, because if it bounces back above that, it can get to the 1546 level in the 9 EMA. Now I'm going to talk about the market for a moment. But just before I do that, let me just show you the pattern in the weekly. Those cup formations that have formed so regularly and then got divided in half in time. And it went to ABCD, then it went to AB minus, and again, AB, this looks like a B minus. I won't put it in just yet. Wait for Friday, because it's a weekly chart. But it got repelled right at that red line, which is the inside track in the Chapman wave, the resistance, the repellent line. And last week we held above it for the close. That was a bullish sign for the VIX. Now it's bearish because it's under the 9-period exponential moving average. So we're going to be watching this really closely. And the monthly chart is just stuck in a range. So now I can go and give you a market overview. This is what I'm looking at. In the Dow, this particular rally right now is very important, because I had drawn this in, but I had not made any mention of it. I just drew it in because A to B, and then B to C, and then C to D in that lightning rod formation needed and still needs, no matter what happens, for the Dow to break and close under 16,000 to 16,000 to really get going. That's number one. Number two is the V-shaped pattern. Very often, I call it the Groucho Marx pattern in the weekly chart. Very often what happens is there's a pretty darn sharp pullback, but it doesn't go all the way to the bottom, in this case to 15,340, and that's really what I'm watching intently. Now, what we've done is we've got short positions. Most of them worked out really well, but I did not take full profits that I should have. It happens occasionally. I just do that. And one of the things we've been taking off every time and then adding back on, and that's been very good. So different ways of strategizing for the shorts, but the volatility index, I should have grabbed it at the opening yesterday, because that was a spectacular couple of days gain. You don't often get that percentage-wise. Hey, it happens. We still made a nice profit, but it wasn't anything like it was. So now let's go through this again. In the Dow chart, have we again seen the leg, the body, the neck, the head, and the beak conclude? Let me show you what I mean by that, and that's going to be really important. In my discussion, I'll give an overview, and I'm going to go through our trades. I'm going to show you exactly why we did them and what we did them for. In other words, what the technical reasons were. But if you're looking at this pattern that I call the stalk leg formation, there's the template right there, or we can call it the schematic. Look what happened in this move that started way back in October of 2013. In the daily chart, there was this huge leg up. Then there was that's not Chapman wave legs. This is just a long move to the upside made up of different peaks. And then it stalls, and it makes an oval formation, which I drew in. And that oval formation was basically on the 7th of November, it made a high of 15,797, and then it pulls back. And at any point, if it takes out 15,797, it could continue higher in the neck formation. That's this neck formation right there. Well, it does that. It's walking the 9-period moving average, continues higher, goes to a D on the 27th of November, pulls back from 60,174 down to 15,703. That's a pretty big move. That was the steepest decline that it had. And the rule of the Chapman wave methodology in the stalk leg formation is that when the neck concludes with the head, the beak should go to at least the top of the body. So in this case, the top of the body was 16,174. No, sorry, my mistake. Top of the body was 15,797 right there. And it pulled back to 15,703. Fulfilled it perfectly. Wait a minute. And then the rule of this particular formation is when the beak concludes, and you don't always know where the beak is going to conclude, but when it concludes, there is a huge move to the upside. But at that point, you have to use other techniques to see where you are. Okay? So now what have we done? We've got another stalk leg formation from the low of the 5th of February at 15,340. Got that oval formation with a high of 16,300. He said, no, I'm sorry. With a high of 60,398. 16,000. Why am I missing one? 16,398. Right there it is. That's the neck. It goes a little higher. It goes to 16,505, and then it pulls back, and it goes right into the body. It goes right underneath the 16,398 level. It goes, in fact, to 16,046. Well, that's 16,040. So I'm talking about the Dow, 16,046 low, right there. I was suspecting is part of the beak, but I didn't think it would conclude the beak. And this is just the way I'm looking at it. Why? Because so many of my charts have signaled that they are at a point in their daily charts that they need much more of a timeout from the peak Ds and Es that they've made. The Dow made a peak F. That was unusual. Actually, most of the others made Ds and Es. Recycled, actually, and it was even more interesting. So I don't know where we are right now in the sense that we've just taken out that trend line right here in the Dow. Let me go to this Dow chart here. And we have been short. I don't know. I haven't been able to check yet if we're still short via the 200%, 300% short the Dow. We just took out that trend line, the falling axe trend line. Once again, there's another one right there. Perfect. We took it out. And the rule is if you, out of two out of three bars, if you close decisively above that trend line, there's just a really good chance you're going to test the previous highest peak and then the major peak, D, E, or F, that gave you the down signal. So there would be 16,405, the high of the 13th. That's very important. Today's high is 16,369. It's about 40 points off that. And we'll watch it. The day is young. But everything about it. Now, here's the other thing that I'm going to be talking about. The reason why I anticipated a sharp spike, but I have to tell you that I thought that the 9-period moving average to just a little bit above it would be resistance. So this went a little. I had said for my subscribers in my opening call this morning that the resistance should be at so I'll tell you now what I said. I said right here, the resistance. Oh, I typed it in. All right. 16,000, I believe I said 16,320s. Well, we went higher. We went to 16,369 as a high today. So how we close and what we do with the close tomorrow is going to be really important, because my thinking has been by Wednesday, we start to see the rollover. That's going to be important. Because, here's the other thing that I'll spend time on Thursday night. What happens when the beta, that is the distance between the fast-moving average and the slow-moving average, and I had a comment made to me last night, and it was a very pertinent one, and yet I thought about it so much over the years that I'm going to go back to what I always do, and that question was, let me see if I've got it right here. Yes. Hello, Basil. When discussing the MACD, you often refer inaccurately, I think, to its fast-moving average. The line that you reference is not a moving average. It is the difference between two separate moving averages. Just thought I would mention this before somebody else brings it to your attention. I enjoy your shows, and I thank you for them. Best just, and he mentions his name. Well, I've had that call many times. And I've spent a lot of time thinking about it. The real question is, in the MACD, that green line, which I term, even in my CD, the fast-moving average, is the result of other moving averages. It turns out that it is a faster moving average. That's what it turns out to be. The 0% line is something completely different. That I would never refer to as a moving average, because it's a 0% line. So I will continue to call this the green line, the fast-moving average, but with a caveat to say that it's really the 9 differential. That's really what it is. It's the MACD differential. It's made up of the others, and it turns into they say it turns into a 9-period exponential differential. And I'm just going to, and I'll go through it a little bit more detail in my webinar. But you can see that it moves a lot quicker than the red line, and that's my point. And the other point was what I said I believe I said to subscribers in my notes this morning, that it was just a narrow beta between the fast-moving average going under the red line, and that can support prices. I spent quite a bit of time on that on Friday. You see what happened here? Look, flat, and then it expanded. That was that whole period in January, that mid-month period where the Dow was holding well, kept looking like it was going to try to make a new high, 16,505 on the 15th of January, pulls back, goes to 16,520 on the 21st, and then kaplop, it makes that H pattern. And I'm anticipating that we will get that H pattern. That's what I'm anticipating, but we'll have to see what happens. All right, so I wanted to go through that. I've had enough time to do all those little details. Now I want to do the other indexes. The QQQ series. Look at that bounce. But if I draw this trend line right here, very simple. I just take the highs and I go join, join, join. It says that until the Qs, they could still do it, but I'm saying until the Qs, excuse me, can take out decisively 90.65 and then hold out of 2 to 3 bars. It's got to be decisively above that, taking out the left side high of 90.93 on the 13th of March. That's the only way you can tackle the 91.36 area. That was the all-time high, not all-time high, the recovery high. The IWM, same sort of thing, but there's a little bit of a difference. All right, I'll go into that. We're going to be back straight after this break. Dow's up 79, S&P's 976. Basil Chapman, Tiger Technicians Hour. We'll be right back after these messages, making a falling axe pattern in the IWM.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Just in the den, someone had mentioned PANW. I've been talking about this for a while. Love the stock. Did not go long. It's making leg D right now as we peak D as we speak, and leg D in the weekly. Very powerful leg B in the monthly. This is one to keep on your radar. Huge pullbacks. Absolutely an opportunity to buy, I believe. I don't know if I'd buy it right now. It's just leg D in the daily, leg D in the weekly. It's risky at this particular point. Okay, the question was IWM. IWM, in fact, leg D, a peak D in the weekly is starting to make a symmetric triangle in the weekly chart. Leg E in the monthly. I'm going to be watching this because if the IWM is able to clear 119 point, no, let's call it 120. If it clears 120, the previous high of 120.47 on the 7th would be the target, but absolutely, if it got there, 120.58 was the all-time high, and it's getting real close to that. I have to tell you something, that the selling that we saw over the last week going into late Friday, was probably the most intense I'd seen. And in some stocks, that was one of the deepest corrections they've had. So if you have that kind of velocity to the downside, rallies need to completely reestablish buy signals to buy modes, and that takes a little while. So I'm going to be watching, and just before we wrap up, I'm going to do a couple of things. So IWM, those are the numbers to watch. SMHs were very important, and the SMH is trading at 44.46. The high, most recent high, not the all-time high, the most recent high is 44.84. 44.84. I mean, that's nothing. That's an eye blink away from reestablishing leg D instead of a peak D. I think I said 84. Let's just put that in there. In the weekly chart, and the inverted Roman candle says that if you get into the wick round about 44.55, there's a real good chance you're going to test the high. And it's in leg E, the very strong magnet. This is the reason why I'm trying to be as selective as possible in the shorting. I'm also trying to be as selective as possible. I almost went long, but I didn't expect 100 points. Well, now it's 82 points. 100 points up today. That to me was that extension about 50 to 60 points more than I was anticipating. I have to respect that, and I'll deal with that. So it means that at this particular point, if there are still stocks that need leg Ds, those are the ones that I'd like to focus on. I want to see, how does a GE trade? How does an IBM? How does a Triple M? How does a UTX trade? So just before we wrap up, because you're going to go to the options hour now, I would like very much just to do this. Volatility index. If by the end of the day, instead of being at 1436, it's at 1471 or higher, it's saying, whoa, be a little careful. It's still active. But if it closes anywhere in the 1436 to 1410 or under 14, that says buying pressure is there. I will not fight buying pressure. Now, on the Dow, I'll just give you the numbers as we read them. And Mike, yes, thank you. I'd love to receive that. Thank you very much. And I'll get back to you in a moment. So 16,336. Up 89 the Dow. See that trend line? Very, very important. Most importantly, the stochastics at 26%. So it's over 20%. That's good. That MACD is flattening out, but there are still technical indicators in the daily chart that say a lot more work needs to be done to be able to challenge that trend line that we can see right there, 16,440. The weekly chart, nice action, but we've got to watch it closely. If there is a new high, I'm probably going to have to call that leg B in the weekly chart and not new leg E. So I'll be looking at this real closely. We'll have a lot more information by the close today, and we'll deal with it tomorrow. We've raised some cash, and I'm not afraid to go long. I'm not afraid to keep going short. It's very selective at this particular point. I don't mind it that way, but you've got to deal with it very carefully. Don't forget, go to the front page, check out my webinar on the MACD and slow stochastic.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.